Hi, let's take a look at exercise 10-2, in which we're going to look at acquisition of an equipment. In this exercise, we have Oak Tree Company that's purchased new equipment and made the following expenditures. The purchase price, that's the invoice price, is $45,000. Sales tax is $2,200. Freighting charges for shipment of equipment, that's the transportation in, is $700. Insurance of the equipment for the first year is $900, and installation of equipment is $1,000. The equipment, including sales tax, was purchased on an open account, which means it's on credit, with payment due in 30 days. The other expenditures listed above are all paid in cash. So now our job is to decide what is the cost of the equipment? What do we capitalize? So let's go through the items, each of these items given, and decide whether we're going to capitalize or not. Definitely the purchase price of $45,000, that needs to be capitalized. Now, the other four items given, we need to look through them and see. So a simple thing to look at is, would I incur that expenditure? Would I have incurred that expenditure had I not bought this equipment? Sales tax. If I had not bought the equipment, I would not have paid for it. The only reason I incurred it is because I bought the equipment. Therefore, I included the $2,200. The next one is freight and charges. The freight charges also, I incurred only because I bought this asset. So I'm going to include it to the cost of the asset. This next one is tricky. Insurance on the equipment. Obviously, if I had not bought the equipment, I would not incur it. However, it's not a one-time expenditure like sales tax and freight. It's not one time, it's a recurring. This is for the first year. I'll incur it in the second year, third year, as long as I have the equipment. Therefore, that $900 is not included in the cost of the asset. So we're going to skip that one. Installation, again, it's only because I bought the equipment and it's a one-time charge. I need to include that. So the installation cost is going to be included. So my total cost of the asset is $48,900. So only the $900, I'm going to skip that, and I'll see how to deal with that. I can't skip it as in not, I have incurred it. I have to do a journal entry. The only difference is it's not going to be included in the cost of the asset over here. So on the day I purchased the asset, I'm just putting XX over here. We'll have to write the date in if you are doing this for real. So the idea over here was we were trying to capitalize the equipment. The amount we know now is the $48,900. Now, important note, the equipment and sales tax was purchased on account. So these two numbers that we have over here, these two numbers that are purchased on account, that will be accounts payable, and that amount is $27,200. The rest of it was paid in cash. These two numbers, these two are paid in cash, and that's what we have over here. This is paid in cash, and this one was on account. So the total asset cost is $48,900. This will now be depreciated over the life of the asset. Now let's go back to that $900. We still need to do a journal entry. So the $900, I have paid cash. I know I have paid $900. That part is easy. The question is, what should I debit? This is insurance for the first year. So this is prepaid insurance at this point of time. That is also an asset, but it's a current asset, which we're going to get the benefit of over the next 1 year, the insurance coverage. So once again, of the items that we have listed over here, of the expenditures, we've spent money. The purchase price plus all the one-time necessary costs that were incurred, those get added to the cost of the asset. Insurance also is incurred because we bought the asset. However, this is an ongoing expense, recurring expense. Therefore, we expense it and we don't include in the cost of the asset. So this takes care of our first exercise, and we'll have a series of exercises dealing with acquisitions.